Okay traders, welcome back. In today's lecture, we are discussing a very important topic, and that is how can I be consistently losing when I know my strategy is profitable? Okay, maybe you're in a community where there are very successful traders, yet you're trading the same strategy as all the other traders in there, but you're still consistently losing, or you're consistently doing the break-even dance. So what is it that consistent traders have that you're potentially missing even though you're trading the same strategy? So if you're a trader right now that's trading a system, a strategy, you know you have an edge, yet you're struggling to execute on that edge, or you're not having consistent profitability despite having a consistently profitable edge, this video is for you. This masterclass is for you. I'm going to be sharing some very insightful insights, practical insights that you can implement right now. They're going to help you bridge that gap, and are going to help you be consistent with the strategy that you're trading. Okay, so this is a very important topic, and this is where the mindset component of trading becomes so important. Once you have your edge, once you have your trading plan in place, trading becomes 90% psychology, 90% mindset. And it's all about dialing in your psychology, dialing in your mindset, and knowing how to manage your emotions, manage expectations, balance your psychology. And it's learning these principles and these tools that I teach on my YouTube, that I teach and that I'm going to teach you today, that I teach my 12-week program, that are going to help you not only become consistently profitable, but sustain that in the long run. Okay, so without further ado, let's get into this masterclass. Why are you losing with a profitable strategy? Okay, now the big problem we're addressing today is traders are standing in their own way. And more specifically, something that we haven't discussed a huge amount on this YouTube is this whole idea of variance. And we're going to explain what variance is, but variance is really the reason why traders, despite having a profitable strategy, are not profitable. It's because of variance, okay? So once a trader has a profitable strategy, an edge, and that's, I put once in bold, because it's really, that's really a big step. Finding a strategy and creating a profitable strategy and edge and putting it into a trading plan, a mechanical trading plan, is a big step. And it may take you 6 to 12 months to do that. But until you've done that, you know, working in trading psychology isn't all that important. I personally believe that before you have an edge and an edge in a trading plan, trading is 90% technical and 10% mindset. You should dedicate pretty much all your time and energy to finding that profitable edge, testing that profitable edge, building certainty in that profitable edge, and putting that profitable edge into a mechanical trading plan. And then once you have that, recognize you've got a blessing, you've got something that very few traders have, and then trading becomes 90% mindset, because now it's all a game of how can I self-regulate and how can I manage myself, so now I can go off and execute on the edge I have and not stand in my own way. Okay? So once you have that profitable edge, this video is for you, and this is what we're going to be discussing today. Like I mentioned, trading becomes a game of self-regulation. It becomes a game of self-mastery, and it becomes a game of self-management. How can I manage myself, my emotional volatilities, my variance, in order to be able to stick to the edge I know I have? And that becomes the big problem, that becomes the big challenge, so that traders can execute consistently on the edge. Because consistent profitability comes from the consistent execution of an edge. Okay? Don't expect consistent profitability unless you're consistently executing on your edge. And consistent execution of an edge is only possible with self-regulation, because otherwise you're going to have this thing called variance. And if a trader does not know how to self-regulate and self-manage and manage their emotions and manage their expectations, they will have variance in the decision-making and will not be profitable. Now, what I mean by variance is it's just before you take a position. Okay, you've got your edge, you've got your trading plan there, and the market presents an opportunity. And what I'm talking about is I'm zeroing in on that moment just before you place a position. Now, If, for example, you are more in a state of fear because maybe you've taken quite a few losses in the past and maybe you're resentful to those losses and that's driving a fear response in that moment, you're going to have a variance towards being fearful and you're going to be more risk averse in that moment. Because when you're fearful, you're more risk averse. And that's a state of variance. If you imagine a mean, a center point, that state of variance is swinging to the left of being more fearful, more risk averse. Now, in that state of fear, in that state of being more risk averse, you may not take a trade that's part of your plan because of that state of fear, because you haven't learned to self-regulate, because of that variance in that moment. And that's ultimately going to disrupt your edge. That's ultimately going to disrupt your ability to have consistent profitability. Because remember, consistent profitability comes from consistent execution of your edge. But how can you consistently execute on your edge if you come to the market and you have variance just before you take a position? Okay, I hope that makes sense. That's such a key point. Now, so too, you can come to the market once the market's presented an opportunity and you can be in a state of greed, swinging to the right in a state of greed, because maybe you've taken a few trades in the past that were profitable and you're puffed up in a state of pride thinking you know better than the market, okay? And maybe in that moment, because you're in a state of greed, because you're in a state of pride, you jump in the trade too early, or you rush the trade, or you risk too much, or you think you know better than the market and you take a tighter stop. Okay, and you're in this state of narcissistically projecting onto the market, thinking you know better. That too is a state of variance, and that too is going to disrupt your edge, because to have consistent, and that's going to disrupt your ability to have consistent profitability. Okay, I hope that makes sense. So what we're discussing in this lecture entirely is how do I manage variance? How do I manage that response just before I take a position? I've been doing this for the last 7 years. I've been trading myself for the last 7 years. I've been working with clients one-on-one for the last few years. I've had many traders come through the 12-week program. And what I've noticed throughout this whole journey is that that moment just before you take a position is the most crucial moment for any trader, because that's where self-regulation becomes most important. And guess what? This isn't just before you take the entry, but this is before you take any decision to manage your position or to close down your position or to take profit. The same principle applies. You have to learn to manage the variance before you make any decision, getting into a trade, managing a position, closing a position, etc., etc. So this lecture, if that challenge there resonates with you and you realize that I'm at that stage now where I have a profitable strategy, but it's me that's standing in the way, this video is for you. Okay, let's get into it. Variance in your decision making. The moment just before you take a trade, if you're either proud, greedy, or shamed, fearful, because remember, pride of the past projects forward into future greed. Shame of the past projects forward into future fear. You will deviate from your edge, which is what variance is. A trader must learn to self-regulate, get back to a state of balance. If you're above the market, you're going to project onto the market thinking you know better. If you're below the market, you're going to be in a state of fear and maybe not take a position that was there to take, both of which are going to disrupt your consistent execution of your edge, both of which are going to disrupt consistent profitability. A trader must learn how to manage those dynamics of being too proud or too shamed to get back to a state of equilibrium so they can be present with the market, and when the market presents an opportunity, and only when the market presents an opportunity, they execute. That's what mastering your trading psychology or mastering your trading mindset is all about. That's what every single video on my YouTube is all about. That's what every single module in the 12-week program, and the whole program's been designed to help traders do that and give them the tools to do that. Because that's the key. That's the key to mastering your mindset. That's the key to breaking out the boom and bust cycle. That's the key to long-term consistent profitability. So do this step by step. There are 4 steps or 3 steps. Number 1, ensure you have an edge and it's mechanical in your trading plan. That's a no-brainer in this scenario. We're already assuming you have that. And some of you will be like, yeah, I have that. But no, really make sure you go back and ensure that you truly have an edge. Because until you do, mastering your mindset becomes irrelevant to a degree, because you can have a mastered mindset of being able to manage fear and greed, but then what are you executing on? You're not executing on an edge. And until you have an edge that's proven through previous data, you're a gambler, not a trader. Okay, number two, you want to manage your psychology. More specifically, you want to manage your expectations prior to trades. Okay, so think about it in terms of a timeline. I am a trader. I've got my trading plan. I come to the market in the morning, and the market is moving, and the market looks like it's presenting an opportunity in terms of my trading plan. That looks like an opportunity I want to get involved in. Okay, great. Now, just before you're about to take that position, you can, in your mind, create ideas of what you think is going to happen in the virtual market in your head. You maybe think that $1 is going to go to the upside, or $1 is going to go to the downside, and you create an idea, an expectation of what you think is going to happen next. This is all you know is outcome-based thinking, because you're thinking based on the outcome of what you think is going to happen next. Now, no trader actually knows what's going to happen next. Nobody knows what's going to happen next. And nobody needs to know what's going to happen next. But the more and more we project and create ideas in our virtual market, in our head, the fantasies and expectations, and we project them onto the market, the more and more we're likely to not be listening to the market and not be actually trading our plan. So what's super important is, and this is why I created the free Bulletproof Your Mindset tool, completely free, link in the description, is you have to learn to identify when you're getting pushed or swayed into outcome-based thinking, of thinking you know what's going to happen next in the market and making decisions based on what you think is going to happen next. And you need to get really good at identifying those outcome-based expectations and grounding them, being aware of them and grounding them and building that muscle. Because the more and more you build that muscle, the more and more you're going to be able to identify these expectations, ground them in real time, and go back to your trading plan. Because what you have to do is you have to learn to identify and ground outcome-based expectations. Because think about it, an outcome-based expectation is one you've created in your head, and if you're trading based on what you think is happening in your head, you've created a disconnect between the real market and the virtual market in your head. And you're pretty much risking in the real market but trading the virtual market in your head, and there's a disconnect there. But what the best traders have done is they've learned to quiet down their virtual market in the head, and they learn to be present with the real market, listening to the real market. And that's what the Bulletproof Your Mindset tool allows you to do. It learns you to, it teaches you to, through awareness, quiet down the unrealistic outcome-based expectations in your head and be present with the real market so you can make process-based decisions. Okay, the market is setting up in these ways. Based on my trading plan, I know I have an edge if I execute on that. I may not be profitable in this individual trade. I don't really care which direction it's going to go, up or down, but my trading plan states in this scenario, I do this, and I don't really care about the outcome. I'm doing this because I know if I do this over 100, over 1,000 trades, I'm going to end up profitable. That's a process-based decision. That's one that allows you to have consistent profitability in the long run. Okay, so that's step number one to managing variance. Because the more you're in the outcome-based thinking in your mind, the more you're in fear and greed, because you're seeking after an outcome, you're seeking after a positive win, and guess what? The simultaneous moment you're addicted to a win and you have an expectation of a win, you fear its opposite, which is losing or not catching that win, and then you're run by fear and greed. The moment you birth a positive idea in your mind, you simultaneously birth a negative, because what's positive, its opposite is negative. They're pairs of opposites in your mind, okay? Or what's positive, you now fear losing what's positive, so you have fear. And guess what? The moment you birth that positive expectation, you create fear, you're run by fear and greed, you oscillate, you have more variance. But the more you can learn to be quiet down those expectations and not be run by the fear and greed and just be present, which is a true skill to have both in life and in the markets, you learn to tap into consistent profitability, because all you do is just execute when your processes tell you to execute, okay? Now, the third step here is neutralize pride and shame after every trade. let's say, for example, I take a trade and it's a win. And let's say in that moment, because it's a win, I'm a little bit puffed up. I go tell my friends, I go post on my Discord, I post on my Instagram, and maybe this trade got me my funded account, and maybe I made $12,000 on this individual trade, and I want to go flex that, and I'm really proud of that, and I want to show it off. In that moment, when you puff yourself up, you self-exaggerate, and coming back to the market next time, you're going to be in a state of pride, you're going to be self-exaggerating, and remember what I said, when you're self-exaggerating, you minimize risk, you see risk, you see things as less risky, and you're more proud and you're more likely to project onto the market thinking you know what's going to happen next, and even if you do take a loss, it's not a big deal. And that's going to drive unrealistic expectations, that's going to drive outcome-based thinking next time you come to the market. Because now in your mind, you have an idea that winning is good, losing is bad. And you're going to expect winning, and you're going to expect that to happen again in the market. You're going to expect more profitability, more profits, and that's going to drive number 2, the thing we just talked about before. And so too, if you take a loss, and you have shame over that, and you want to hide it, and you don't want to show people, you don't want to tell people, you're going to fear that happening again in the future. And that fear is going to drive, again, a positive expectation, because whatever you fear, you want its opposite. You want to seek after its opposite. You want to run away from the fear. You want to run to its opposite. So that's going to drive outcome-based expectations again. That's going to drive when the market presents an opportunity that aligns with your trading plan, you're going to be too fearful to act. You're going to disrupt your edge. So this whole idea, what I'm trying to share with you, is a way to quiet down the outcomes, the fear and the greed, so you can get back to your process, get back to your edge. So you want to, when you neutralize pride and shame, when you take a win, you want to be aware of the drawbacks. You're already aware of all the benefits, all the positives, but you also want to be aware of the drawbacks. How is this a disservice to me? What are the risks in this? So you can learn to self-regulate in that moment. Because if you don't learn to self-regulate, you're going to attract external circumstances to regulate you for you. So what tends to happen with traders that push themselves into pride and they don't know how to self-regulate, they get humbled by the market. Okay? And when you're in shame, when you're below the market in your perception, you have to learn to ask questions like, what are the benefits? How is this helping me grow? What are the lessons from it? So you can get back to a state of equilibrium. Now, I teach number 3 in detail and even number 2 in detail in my 12-week program. And I have all the tools, all the accountability, all the walkthroughs. I give you the answers. I show you exactly step by step what to do to ensure that win or loss, you can self-regulate, you get back to your trading plan. And I also share, obviously, the step number 1 in the 12-week program as well, developing your mechanical trading plan. I do an audit to help you get your trading plan right. I help you put it into a step-by-step checklist. So if you're interested in taking this application to the next level and you want the accountability to follow through and you want my guidance, you can talk with me one-on-one to help you refine these and master your trading mindset. Check out the 12-week program, get a free 7-day trial. But anyway, these are the 3 steps to ensuring that you can become profitable with a strategy you know is profitable. Because the thing that's stopping you from being profitable with a profitable edge is yourself, it's your psychology. It's your expectations before trades, and it's your inability to self-regulate after winning and losing. Because it's those 2 things that are going to take you away from your trading plan, they're going to take you away from executing consistently on your plan, and take you away from consistently having consistent profitability because you're not consistently executing on your edge. So I guarantee if you go through and do these 3 things, you're going to be profitable with your profitable edge, okay? Now, I put a tweet out recently as well. Don't use poor psychology as a scapegoat to not trading a profitable edge. So make sure you have a profitable edge, make sure your system actually works, and then build the proper mindset on top of that, and you'll tap into consistent profitability. I've seen it over and over with clients. The moment they get clear on their edge, put into a mechanical trading plan, learn to self-manage their expectations and their pride and shame after wins, all they do is just consistently execute on their edge. When the market presents the opportunity, They don't feel the need to trade here and there when they don't need to because they're not greedy, they're not fearful. And guess what? They become consistently profitable over a year. Over a year's results, their results are consistent. Their results are consistent and they're profitable. So I don't necessarily think it's hard. I don't think it's difficult. You just have to follow the step-by-step protocol that I've outlaid for you here. Okay? So hopefully this was insightful. Hopefully you've learned one or two things. If you did, make sure you like, comment, subscribe, share the video with those you know will get value from it. Now, I also have an email domination series, a trading mindset mastery email domination series. It's completely free. It's for those of you who want me to show up in your inbox every few days, giving you practical insights and practical tools that you can implement into your trading right now to see an increase in profitability, to learn to manage your psychology, to lower the emotions, etc., etc. So if you resonate with these YouTube videos, you're gonna love that email series. The link's in the description, the link's in the first comment. Go and sign up for that, completely free. I look forward to seeing you all in the next YouTube video. Thanks for watching to the end. And if you like these types of videos, please let me know and I'll do more of them. So we'll speak very soon. Cheers.